Bollinger Bands are a technical indicator widely used in trading to analyze volatility and identify potential price reversal points. This strategy focuses on using Bollinger Bands as a tool to spot trading opportunities. To apply this strategy, you need to have a good understanding of Bollinger Bands. These bands consist of three lines: the upper band, the lower band, and the middle band. The middle band is a simple moving average, SMA, which is usually calculated over 20 periods. The upper and lower bands are calculated by adding and subtracting a multiple of the standard deviation from the middle band. The standard deviation multiple is usually set to 2. The strategy is based on the premise that prices tend to move back towards the central band after reaching one of the outer bands. When prices approach the upper band, it could be a sell signal, while when they approach the lower band, it could be a buy signal. A possible approach to this strategy is to wait for prices to touch or approach the upper band and then look for a bearish reversal signal, perhaps supported by a resistance area. When a sell signal is identified, a short position can be taken. In this case, it is important to set a stop loss level above the upper band to limit losses in case prices continue to rise. Don't miss the next videos in quick but informative format. Click the sign up button below. Conversely, when prices touch or approach the lower band, you can look for a bullish reversal signal, such as a bullish reversal candle or a support level. When a buy signal is identified, a long position can be taken. In this case, it is important to set a stop loss level below the lower band to limit losses in case prices continue to fall. It is important to keep in mind that Bollinger Bands are a technical analysis tool and do not guarantee sure results. It is crucial to use this strategy in combination with other analyses and tools to confirm trading signals. Furthermore, it is advisable to test and refine the strategy using historical data or a demo account, before using it for real money. In conclusion, the Bollinger Band strategy can be a useful tool for identifying potential price reversal points. By closely monitoring price movements against the bands and looking for reversal signals, trading opportunities with a good risk-reward ratio can be identified. Always remember to carefully manage your risk by setting appropriate stop losses and always using prudent capital management. If you think you have provided useful information to make a decision, I kindly ask you to subscribe to the channel by clicking on the button below the video. Thank you.